Traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not investment advice. This video is another trade school high frequency trading example and trading explanation video where I'm going to discuss with you and going to show you why I choose some trading setups, because when I'm trading then on live trading, I trade really fast and I cannot explain them so in detail. And I got almost always questions, and because we have weekend and I cannot trade because there's no OTC market here. And so I will use the weekend to do this kind of trade school videos to explain you why I should have done in detail some kind of trades, where I do explain also those things which I have explained in my ebook. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook, it's for free. You'll find the link in the description, and in the description you will find also the link to the Facebook group. Join the Facebook group, don't miss it. So, and those things which I have explained in this ebook, I'm doing now the explanation on the chart and on those tradings which I have done already, and those trades are all based in the playlist. It's called online trading playlist. Yes, if you want to see them, what I have told you there, you can watch them there, but I do now the explanation of those things. And before we're going to lose some time, I will start now. So let me see, where do we have this? Yes, we have here this was the last, this is the second part. The first part was about those trades. Let me show you this. The trades which I have explained in the last video were this one here, the pullback here from the 1 deviation Bollinger Band. Yes, the line was not drawn here on the rejection from this level. I entered into a call because we had here the EMAs heating up. Yes, and you see, I have explained this. If you get here the highest point, if price is going to cross here, the EMA is crossing the SMA, you get at this point, or you can expect a reversal, or you can expect a pullback. Both are possible, yes, and you have then to be aware of it, yes, what's happening, yes. And that was the first trade here, this one, this candle, and then after this one I have done this trade here because this was an engulfing candle, and after this engulfing candle, yes, I entered into this trade because I was expecting a pullback here. Yes, the pullback from the 1 deviation, because we got already a pullback here with a fake breakout from the 1 deviation here. Yes, so, and after this, you see here, you can imagine, or you see that I draw the line already. Yes, we have here a line. This line is nothing else than the neckline from this double top. Yes, I have explained to you, if you have here this kind of resistance, price got a reversal from this, price tries to again to go against it, it is not able to go there, then you can expect that that will be a nice double top. Yes, but you have obviously be aware if this neckline is close, yes, close to the 20 EMA in such an uptrend. Yes, because the alignment of the EMAs is telling that we have an uptrend, and that means you have to be aware of it. Yes, and to see in detail what's happening here, that is nothing else, double top, downtrend, pullback. Yes, that is because we have here the 20 EMA and the uptrend is strong, so strong to avoid the double top to unfold. And because of this, I understood this. So, and I will show you this almost in the ebook again. So let me show you this in the ebook. So, and I have shown this 100,000 mal in my videos, but I cannot do this less. The test, I have to show you this again. So we have here the double top here. That is the double top. You see here double top. Then we got the downtrend. Here is now the 20 EMA. Yes, that is the area where the 20 EMA is. and now we get the pullback to the neckline. Here we have 1, 2, 3, 4, 5, 6 candles. In this situation here, we have only 2. Yes, you see 1, 2 candles, and we are already at the neckline. Here we needed a little bit more to reach to the neckline, and that is obviously different to any kind of chart pattern, any kind of chart. Yes, that can be everything. So, but important is that if you have reached the neckline, you are ready to do a pullback, and that is what I have done here. So let me see this. So this already confirmed that this area, this could be already done the first put here, yes, and that candle here could be have already done the first put would be this kind of candle here, yes, because this candle here already confirmed the neckline, yes, that we got here. You see here we got support, here we got resistance, yes, and here we got again resistance, and that was already twice a confirmation that the resistance will hold, yes. Okay, here we broke through this, that is a breakout, sorry, that was a breakout. So, and after this breakout, this line here would be resistance, yes, and that was support. I have drawn the arrows wrong, so let me draw this again. Here we got a breakout, and here we got a breakout, and here we have support, yes, and resistance, and here also that would be the second resistance, which could be trade 2. So, and after this I entered into a trade here on the next candle, yes, because it's nothing else than that what I have explained here, yes, the pullback at the neckline, that one here, yes, that would be the complex, but I'm talking here about the simple one, where we touch the neckline with the wick or with the body, it doesn't matter, yes, but this is, you see, with the wick, we crossed it, so we confirmed that this neckline will hold again. So, and then I entered into a trade. Let me see what we have done without any kind, you see, I was drawing some other things, okay, and then I entered into a put after I have understood that this kind of neckline here would be the resistance, and I entered into this trade. Okay, you could do always wait till price would break through it and enter with a margin of safety, but because I understood here from this concept here that we got here a long uptrend, then this double top forming here, yes, I understood that after price tries to break through this again, I could enter immediately, because those wicks here are telling me that we got here selling pressure, yes, and that was the reason why I did a put. That is obviously, you see how close the 20 EMA is to the neckline, yes, and that's the reason why here the downtrend already stopped, yes, it stopped after this. So, and then the pullback took place. So let's see, yes, that was it, yes. So this is exact this things what I have explained in the ebook, yes. You see here uptrend, yes, with a few pullbacks here, yes. Then the reversal starting with the double top here, yes, with an, you see the double top where the second top is lower than the first top, and then we have here the neckline, and then we got a pullback here, a reversal at the 20 EMA, and then again a pullback going down, yes. And then after this you could expect that the next candle would be a red candle too, yes, if you are not hit from some kind of consolidation area, because you see Bollinger Bands are almost squeezing, yes, so you have to be aware of it, that there could be happening some kind of consolidation area. Okay, so let me see if I find the next video, because that was it already from this one. So 1 second, I will check it out if I find some other one. Okay, so let me see where I do find this. Here we have another one, yes. Here I do play, and then we can discuss this, or I'm going to discuss this. So we have here the same situation, yes. I zoom out and you can see here the same situations, and then I enter here into a call, and I will show you here till it ends in the next 23 seconds, and then I will explain you why I did this trade. and why it's worked out. Yes, because it's at the end is similar to this one what I have explained before. So let's see what will happen. So another 2 seconds, and you got see it's got in the money. So and 1 second, it's, let me see this here. So why I have done this trade here without touching the 20 EMA. So first of all, we have here again the uptrend, which I have explained before. We have here the pullback of the 1 deviation. Again, that is here another pullback of the 120 of the 1 deviation. That is already a sign that we got here. Here, that is a sign that we got a strong uptrend. Yes, after this morning star. So you could trade this, but I started the video when I entered. I was already here. So, and I entered on this trade because I understood from the that is the initial part of the upcoming uptrend, yes, and because we got here this kind of green candle, which would be, it started with a green candle. It started already to going up without any kind of movement downward. It was for me a clear sign that we are going into an uptrend and that this one would be a pullback, yes, or a retracement. You see here, we have here at this situation already a consolidation area at the 1 deviation. Yes, that pullback is more a consolidation area because we have the market is still not ready for an uptrend. It's still too flat here, everything, yes. And also this one here was only a strong movement, maybe by a news, maybe I don't know what, yes. But you see all other kind of candlesticks where before it was ranging here. Yes, you see the crossing of the EMAs here is showing that we were ranging, and after this ranging it started to get into an uptrend here, yes, but this uptrend was not established so strong, yes, that I would say you can count on it. And after this short movement here, the uptrend was already over. We entered from the 1 deviation part here between the 1 and 2 deviation, what is almost an uptrend. We started to enter into the area between the middle Bollinger Band, yes, and the 1 deviation, which is the ranging area, yes, the ranging or the reversal area. And because we got here a rejection, or I would say a reversal at the 20 EMA, I entered here into this trade because I expected in this kind of situation, because I told you if those two are getting close together, yes, it's almost a situation where it could be a pullback or a crossing would be a trend reversal, yes, and that is what I expected here. But because the EMAs were aligned in this situation, I expected a pullback in this kind, yes. Also, if this would be a strong candle, yes, but the thing is, you see, the candles got tiny, and then this was only a exhaustion candle here. That was an exhaustion candle, and I understood this because the only thing what you see here is no upper wick, which shows a selling pressure, no selling pressure, and only a small lower wick here, lower shadow, which is showing that there are buyers getting in, yes, and that is the reason why I did this call, yes, because we have an uptrend here. We got here already some significant pullbacks from the 1 deviation, yes, which shows that the uptrend is still active. Then we got here into a reversal. Then we got an exhaustion candle, and after this exhaustion candle, we got this kind of this kind of pullback. So let me see what's happened then. So after this, I waited to understand if there will be a continuation, and that is it. Yes, I entered immediately into a put, and that was because I understood we didn't touch, and I will explain this. Now the EMAs are also crossing. Yes, you see how flat the 20 EMA got. Yes, that movement of this candlestick here has not formed in this case a strong reversal pattern. Yes, there was not inverted bullish hammer, that was not a doji, yes, something what would significant or showing that there would be now a continuation. Okay, now I'm explaining the ebook, yes. Let me put it a little bit forward. Yes, and then I got in the money. So let me see if this will pass by. So yes, and let me put this, yes. Then we got out of this. So, okay, you see it got a continuation, and the continuation got again a rejection from this, and you see here, and that is what you have to care about. We got here a downtrend, yes, a minor downtrend. We got already a consolidation area here at the 1 deviation. So you see one huge candle consolidation, then you see here 2 candles, another consolidation, yes. Then this candle here, this candle shows only an upper wick, which shows selling pressure, and that was also the reason why I entered into a put on the next one, because I expected the downtrend would continue. After this downtrend, you see here a lower wick, yes, which is larger than the real body of this candle in this consolidation area. That was a sign that the next candle would be a green one, yes, because we are still in the major uptrend. Also, if this is a minor trend, downtrend, we have still a major uptrend, yes, because this wick here, with this rejection from the middle Bollinger Band after crossing the 20 EMA, crossing the 20 SMA, is showing that we are getting here still into an uptrend, and that would be a reason to do a call on the next candle. So, okay, that was this one. Let me see what's happened then. Because we are here in the initial part. Then I was explaining that we got here some kind of consolidation area. Yes, here we have consolidation area, and then I explained the 4 keys. Okay, let me put it forward. So, and then, okay, again, how I explained this in detail. And that is the question what I'm asking. Here you see this kind of hammer, which is tricky. You see it's tricky because it shows that price would go down further, but in this situation I would not trust it. I believe that price will go up instead. So, and let me see if there will be another trade now. And you see price is going up. Let me see if I'm doing another trade here. I don't know. Else I will stop till I find the next trade. So, okay, here we have the trade. So why I have done this kind of trade? So we got here something what's looking like a shooting star, yes. So I waited till price got a little bit higher entry point, because this shooting star with in combination with this engulfing candle and the complete chart here, which is showing also that we got here tested this resistance twice. So let me put this down and get this in the money, and then I'm gonna explain why I took this trade after, because also here is important that I'm gonna show you those things which I have explained also in the ebook, where I talked about the EMA and the Bollinger Bands. So let me see if I can show you this after this trade. So I explain you why I took this put, and I waited till I get a better margin of entry, say a margin of safety, not of entry or entry point, yes, because you see it got really close here, yes. So let me stop this video. If I would have entered immediately here, yes, it would be gone out of the money, because the uptrend is still here, yes, in such situation. And you see how important it is that you understand the EMA alignment. If you have this kind of alignment, you know there is still a minor or major uptrend, yes, and that can interact in such kind of context, yes, because you see Bollinger squeeze here, that is what I have explained in the ebook. Bollinger squeeze, yes, and consolidation area. And that was the part why this candlestick would not be a red candle. Yes, that was not a red candle because we got here a Bollinger Squeeze and ranging. You see, ranging, Bollinger Squeeze, yes, consolidation area. And because all the EMAs and middle Bollinger Band are so close together, you can get at any time in the last 30 seconds a retracement of the running candle, and that would be out of the money only because you are in such a constellation. Because at the end, this kind of candlestick here, what is a shooting star in combination with an engulfing candle, yes, and a pin bar, all three things together are a clear sign that price will go down, yes. But we have here a Bollinger Squeeze consolidation area, and that is the reason why this green, red, probably red candle, which would be a red candle, would end up as a green candle, because we have here all those things against us, yes, against this put, where the uptrend, yes, the uptrend which is forming by this EMAs, which was already here, you see here got already a few times a pullback from the middle Bollinger Band 20 EMA and the one deviation, yes, and here at the end this engulfing candles doesn't work out because we have a strong uptrend and this kind of consolidation area, and that is what I have explained in the ebook. Let me show you this, where I have shown, and that is also one of those videos which you should watch with the other one, yes, if we are going to talk about those things here, where I have explained the EMAs. Yes, here you see if the 20 EMA and the middle Bollinger Band are getting out wider, yes, you can expect a reversal or a pullback, one of both, yes, and then the middle Bollinger Band here, where I show you here Bollinger Squeeze, yes, consolidation area, yes, you see they're getting together, and then price is stuck there in between. And because we are here in between, price got a rejection here from the middle Bollinger Band here, yes, and they are so close together that an entry point at this level would be out of the money. So I think that was enough. I have shown you again a few of those trades, explained them in detail, how they, why I took them, and I'm gonna explain you also in these videos how you have to read the Bollinger Bands, how I read the Bollinger Bands when I was doing these trades, because when I'm doing those trades, I'm not able to stop the video to show you this detail every time with the tool, yes, that would bring me only out of the flow, of the trading flow. So I do this kind of explanation videos now after this to explain you why and how it could be done also wrong, yes, but this one here only because the market condition, and that is what every one of you have to understand, that the market condition should be analyzed too, yes. If you see such Bollinger Squeeze, you have to be aware of it, that such kind of candlestick pattern, because this candlestick pattern here in this situation, like this is looking like, yes, is a clear put, yes. It's so clear that I would enter, and I wanted entering before, but the rejection of this candle put the price at this level, so I get this into the money, yes. And that is the reason why you should be aware of those kind of consolidation areas and such kind of things. You have the Bollinger Bands, you have the EMAs, and so you can use them to give you an indication what market is going to do next. Yes, and how price could be react. And if you have almost like here all EMAs together, that is almost a little bit tricky, because price can reject and react on any kind of EMA, yes, and on obviously also on SNR, which are here in between too, yes, because we have here price action on the left. That means we have here SNRs, yes, the support and resistance levels, which could act here too. Yes, and maybe this price doesn't react only with the middle Bollinger Band, it reacts maybe also with this support and resistance area at this level here. Yes, which because we have here price action on the left. Let me show you. You see here, and it could be also that it react on this because price already reacted here. Here it breaks through. Here was support. Here breaks through, and here was support. Yes, and that is support again. Yes, that is what that about. And you see here first of all resistance, and that is maybe it reacts through the middle Bollinger Band in confluence with this support and resistance level, and that was the reason why this shooting star, yes, in combination with pin bar and engulfing candle doesn't work out like expected, yes, because we got here in the consolidation area. Okay, that was it already. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, drop me a line in the comment section and or join the Facebook group. So I would say stay safe, yes, and bye-bye.